In this video, I'm going to review the latest earnings report of Disney. I'm going to review the earnings, update you on my own valuation model, and try to determine if Disney right now is actually a good buying opportunity, or if maybe Disney is just still overpriced. And I'm going to go over their turnaround plan in general. But before I start this video, I want to talk about something I posted on Twitter, which only got 2 likes, and this is for very good reasons, especially with the bad sentiment around Disney. And this is what I said: Disney is not growing, declining subscribers, unprofitable in streaming, but everyone else knows that, which is why Disney is trading at a 5-year low. It's not trading at all-time high. Disney is trading at a 5-year low. Stocks bottom when no one is expecting them to. And this is the biggest mistake that most investors make, is they focus a lot on the news. And they see this company having bad news, they say this company is trash, it's going to keep going down, it's not worth anything, and they just focus on the news. But they don't know that everyone else knows those news. This is not some kind of insight that I only know or you're the one that knows. And if everyone knows such news, then it's most likely reflected in the price. And this is when stocks bottom. Stocks don't bottom when everyone is expecting them to. Stocks don't bottom on good news. They bottom on bad news. But whenever the stock takes enough bad news, this is when it bottoms and to move to the opposite direction. Just like how stocks bottomed in October. No one really expected that. I don't know a lot of people that called the bottom in October, including myself. I thought maybe we could bottom in 2023. This has not happened so far. Nothing close to that actually happened. It's just like what happened with Meta. It just went up out of nowhere. It did not go up on good news. It went up actually on bad news, a lot of bad sentiment. And Disney experiencing the same thing, which is why I try to focus more on the value and where the price is trading at relative to the bad news that everyone actually knows. Alright, and I actually don't own Disney, but I have something within options on it. I'm going to share some of that later in the video. But if we look at the earnings report, they did beat on EPS, $3 adjusted versus 95 cents per share. They missed a little bit on revenue, and this was the biggest headline that you could see everywhere, which is Disney Plus losing subscribers. And subscribers came at 146.1 million versus 151.1, which was actually expected. And you could see headlines: Disney Plus is losing subscriber for the first time ever, or the first time in decades, or whatever the headline is. And there's a lot of things around this headline, and people say all kind of things to justify it, but no one actually looks at the details. And if you look at the Disney Plus core subscribers, which is the Disney domestic and international, it actually grew in subscribers. It was 104.9, now it's 105.7. They did actually grow around 1%, not passive growth, but it still grew. Now the biggest contributor to the decline was actually Disney Plus Hotstar. This is some kind of a streaming service they have in India, and they lost some rights to some kind of a sports game. I believe it was cricket or some kind of a tournament they play in India, and it went from 52.9 to 40.4, and people are just unsubscribing. And this is just, this is normal, because people were subscribed to watch this kind of tournament and games, sports games that they have, and now Disney lost those rights, so no one's gonna be subscribed to Disney Plus Hotstar. And this is what's contributing to the massive decline. This is why you see all those headlines: Disney Plus is losing subscribers. Yes, it's not growing as it should. It's losing in the United States, but it's actually growing in Europe and a lot outside the United States, which is still growing in my opinion. And I believe people should not really be focused on Disney Plus growth in subscribers. They should be focused on Disney Plus profitability within the subscribers. And the profitability is actually not profitable, it's still losing money, but this has been improving. It troughed in Q4 of 2022. In Q1 it's 1.1, in Q2 it was 0.7, now it's 0.5, so over pretty much $150 million improvement from the last quarter. This is pretty amazing, and it's heading into the right direction. This is what people should be focused on, not much on the top line kind of subscriber growth, but more on the profitability of those subscribers, which could be a massive growth engine for Disney in profitability, not in revenues, but in profitability. And this is what really Disney needs, is more profitability than actually revenue growth. And if you look at what they are trying to do to bring it to profitability, they are trying to raise raise the price of Disney Plus. The commercial-free version Disney Plus is now going to be around $14 per month, which is a 27% increase. And the one with ads is going to remain the same at $8 per month. Now, if we look at how this actually kind of compares to other services, Netflix's standard plan without commercial is around $15.49. You know, Discovery, Warner Brothers Discovery's Max is around $16 per month. At $14, I believe this actually makes sense. It's still in a competitive range. I think it was way overdue. Now, something we have to watch for is to see if the subscribers are going to stick around for Disney Plus, or are they going to unsubscribe because of the 27% increase. I personally believe most of them will stay. Some of them might, cancel the subscription. But this is something very important we have to monitor over the next earnings report. But I see a lot of improvements happening within, Disney Plus, a lot of the direct-to-consumer profitability. I'm focused more on profitability and not actually the top line subscriber growth. Now, they did experience a slowdown in the parks and, kind of theme parks and stuff. You could see an operating income. It was 1.7, now it's 1.4. And this is mainly from slowdown in general, kind of inflationary pressure, higher interest rates. And Disney is not the only one that's experiencing. SeaWorld is experiencing that. A lot of other theme parks, a lot of other kind of experiences park and stuff, they are all experiencing the same exact problem. So this is not actually a problem within Disney itself. And if you look at what the CEO actually said, he said, 8 months since my return, it has put us to exceed our initial goal of $5.5 billion in savings, as well as improve our direct-to-consumer operating income by roughly $1 billion in just 3 quarters. So this is my biggest problem with investors and with Wall Street. All Wall Street can focus on at this quarter and how much they lost, how much they made. But no one can look 2 or 3 quarters from now or 4 quarters from now. And if this momentum continues, Disney Plus is going to be profitable. And this is going to be a game changer for the company. It's going to be a massive growth driver in net income, free cash flow growth, and profitability. You could look at free cash flow. Free cash flow is already improving. It was 187 last year, and now it's 1.6 billion. I talked a little bit more about it in my previous video. But I see a lot of good things that are actually happening if you ignore all the noise, all the bad news. Again, I'm not a Disney shareholder, but I'm seeing a lot of positive things. I have seen this before. This is a massive turnaround plan, in my opinion, and if they continue on this momentum in terms of the reducing losses, cutting costs, doing a lot of other things, I personally believe there could be a massive change in sentiment within Disney, which could cause a massive share appreciation. And then after the stock goes up, then people start focusing on the good news and they ignore the bad news. This is what normally happens. As I said, stocks don't bottom when everyone is expecting them to. They bottom on bad sentiment when people are associating everything with political views and they're not even looking at facts or looking at numbers. This is where normally these stocks tend to bottom. But in terms of my valuation model, if you want a deeper dive, I did that in my previous video. I reviewed the debt situation for Disney on how they can manage the debt. I looked at free cash flow growth and I explained all those metrics. But my fair value hasn't changed. It's actually around $76.28 per share. And if I buy it around there, I would get around 100% on the upside. If I buy Disney today, I would get around 69% on the upside, or 11.1% compounded using very fair estimates, 5% revenue growth, the same net income margin around 13%, 20 times earnings, which is lower than the historical average. I put all of that stuff in my previous video, which you could check out the reason behind them. But what I'm personally doing in my portfolio, I am selling puts around my fair value between $80 to $75. I am selling puts over there. I'm getting a good premium, sometimes 4 to 5%, depends where the stock is trading at, which would give me even, if I get assigned around $80 or $75, then I could, have a much lower cost basis, including the premium. I personally believe Disney is a no-brainer at $76 per share if it ever gets there. But the way I see the sentiment going with Disney and the way I see everything that's happening, I would doubt it goes to 76. It's possible, but I see a massive turnaround story that's happening, that's being ignored by the market, because the market and investors are focused on short-term news, short-term numbers, short-term stuff, but they are not looking at the progress that Disney has made, especially with the losses of Disney Plus and the direct-to-consumer segment. So this was no financial advice, of course, just my opinion on Disney. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.